Hello everybody, Joe here with another episode of 4 Minute Finance. Today we're going to talk about tax brackets. It's basically something that most people just do not understand. They're never educated on how they work, and there's a lot of different misconceptions and guessing that goes on about how they do work. Hopefully debunk a few of those and help you take a very simple approach at how they do work, okay? When we're talking about tax brackets, we are talking about the rate to which your income is taxed at, right? So there are federal tax brackets, those which apply to all income earners in the United States of America, and there are also, depending on where you live, there may be state taxes, okay? Some states are income tax free, such as Florida. Other states have tax brackets that work in the same sense of federal tax brackets, meaning they're tiered tax brackets. We'll talk about that in a second. Other states have a flat tax rate of, say, 3%, right? And that would just apply regardless of how much you make. You're going to be taxed at that rate, no matter what, okay? On the federal side, which applies to, like I said, all of us are earned income individuals in America, they are tiered, okay? So easiest way to think about this, imagine that we all have a ladder, okay? That ladder is the tax brackets. Every American's ladder is exactly the same, okay? The only thing that is different based on how much you make is how high up you climb up that ladder. The higher you go on that ladder, the more you are going to be paying in taxes, okay? With that said, everything below you, right, is exactly the same as somebody else's, okay? For example, if I make $100,000 and somebody else makes $50,000, the tax that we paid on that first $50,000 of income was exactly the same. Nothing was different, right? And sometimes I feel there's a misconception that when you break into a higher tax bracket, your income is then taxed at that higher amount for everything else. That is completely untrue. Again, regardless if you made $1 million this year or you made $50,000 this year, both individuals paid the exact same amount of tax on that first $50,000, okay? The $1 million earner just kept going up, and with that, he started paying higher rates on higher amounts of income as he went up that ladder, okay? So two different terms to think about. There is a marginal tax rate, and then there's an effective tax rate, okay? Your marginal tax rate refers to the next dollar of income you earn, what will that be taxed at? So that is, in essence, right, that is the highest tax bracket you're in, okay? So if I made $100,000 this year as a single, non-married, right, single individual, I would be in a 24% marginal tax bracket. Anything above 84,000, right, 84,200, anything above that number is going to be taxed at 24%, right? So if I made $100,000, the next dollar I made, right, or 85,000, doesn't matter. My marginal tax bracket is 24%, okay? That same individual, if you made $100,000, okay, whereas your marginal tax bracket is 24%, your effective tax bracket speaks to the amount of tax you paid on average for all of that, okay? So $100,000, your effective tax bracket, your effective tax rate, excuse me, is going to be about 15 or 16%. Okay, that's rough math. I don't actually know what it would come out to, but it's always going to be lower, right, than your marginal tax rate. Okay, I hope that makes sense. Feel free to ask questions, comment, subscribe, like. I'll answer every single comment that you guys ask me. Hope you guys have a great day. See you soon.